What is up, guys? Welcome back to another episode of Lucid Daily. And today we are going to talk about why Lucid stock price ran so much. And I finally did as promised, and I updated my fundamental analysis spreadsheet where we'll be going over all of those numbers. But first, let's talk about exactly why Lucid ran so much today. So if you go ahead and pull up Lucid's numbers, Lucid was up 13.2% today. That's absolutely incredible considering everything else that happened in the market. I mean, if you just pull up the S&P 500, they were down. It was relatively flat, actually, kind of rallied back a little bit in the afternoon, but relatively flat during the day. And the whole stock market has just been absolutely in the toilet. Not news to you guys. But what is pretty unique is seeing Lucid run today. So Lucid was up 13.2%, up 1.2% in the after hours. Now, let's talk about exactly why. This article about Motley Fool actually hits it pretty well, and I think it's pretty self-explanatory. And it's actually so simple. Rivian reported good numbers, and I wonder if this is going to be a pattern for Lucid. We see there's obviously a fairly large gap between Tesla and Lucid and Rivian. However, I understand Lucid and Rivian are in different markets, but they're at similar stages. Obviously, Rivian is producing quite a bit of cars more than Lucid is right now, but I think that the stages that they are in terms of ramping are closer than any other companies that you can compare against. Not saying they're similar companies, but I think the stages at which they are ramping and the acceleration at the current market that they're in, they're the most comparable companies. And so I think investors may have a little bit more trust with Rivian in terms of how they're ramping and their products and just the company. And not to say that Lucid doesn't have trust, but I think investors feel a lot more comfortable when they see Lucid report and they can kind of like say, okay, like let's see what Rivian's up to. And then when Rivian reports, you see a run like you saw today. Let's check out Rivian stock. I actually have not looked at it today. What happened with Rivian? So yeah, Rivian had a 17% run today, 3% in the after hours. So they're actually recovering a little bit, but they're still down 21% over the last 5 days. Absolutely crazy market. But I think that this is a pattern that we're going to see with Lucid. Now, I don't want to think anybody I think Rivian's better, but I think that these are companies that can be comparable in terms of like we've already talked about. And when investors see that Rivian does well, they're like, hey, the Motley Fool article says that Rivian reiterated what Lucid said. What was the exact words they said? They said it was so both of the companies maintained their production numbers. They did not revise down again. Not to say that they can't revise down later in the year, but as of right now, they did not revise down, which people could have investors could have thought, oh, like Lucid's just blowing hot smoke. They're not going to hit it. But to hear Rivian say it as well, it's like, okay, maybe they have things figured out to hit these targets. Good thing they revised down last year. So that's why we saw a rally today in Lucid, is because Rivian reported good earnings. And I'm trying to find the best correlation between the two. So that's the closest I can get in terms of correlation, why the stock ran up so much. Now, today I wanted to break down exactly our results after Q1 with their capital expenditure, R&D, SG&A, and everything like that, and when Lucid can become profitable. And I think it's important for investors to know that. So just to kind of start off, shout out to Jenny from the blockchain on Twitter. She actually had a list of the math of what Lucid needs to do production-wise or delivery-wise, whatever you want to have your reference point. So they hit at least 11,000 by the end of the year. So we heard that in Q1, they delivered 360 vehicles. April, so that's only, now that you kind of say that out loud, it's like, they delivered 60 vehicles from February to whenever they reported May 6th or 8th, one of those 2 dates. So it's kind of like, man, supply chains must have been really rough, but oh well. So you saw that from April to March, but then you saw a decent acceleration of product. I think it was deliveries. I'm going to say deliveries just because it sounds better right now. So 360 deliveries in Q1. And then if they do 300, if they've already done 300 in April, that's 300 in April, 700 in May, 900 in June, and you guys get the picture from there. You guys can already see that. 1,000 in July, 1,300 August, and they slowly start ramping. I don't know why the number falls off from 1,900 to 1,700. I'd say closer to 2,000, 2,100. Hopefully they get the ramp by then. But if you add these numbers up from Q1 to now, that's 11,460 by the end of the year. So I'm going to put that 11,460 cars by the end of the year if they follow these numbers. So that's Q1, 1, 2. Yeah. You guys see what I mean? So that's 11,000 cars. Now let's talk about what happens. So what I did is I took the numbers from their earnings. So I went through their spreadsheet, went through their press release, and I got all of like their cost of revenue, research and development, SG&A, and I took these numbers and I extrapolated it a little bit and multiplied them by 4. Now I know that these may be a little bit variable, but my spreadsheet actually doesn't come out too terribly off. It's actually pretty close, give or take 1 or 200 million, and that's just because Lucid right now is a negative expense margin, so it's kind of difficult to get a gauge on things. But let's go ahead and see what I'm talking about. So they actually had a average selling price for, like, if you take their revenue and divide it by like the 360 cars in Q1, you have an average revenue per car of 160,000. Those numbers are not going to stay like that. But let's say that they get that average revenue per vehicle. Now, I'm going to say one of Lucid's strongest components, one of their biggest competitive advantages is their average selling price per vehicle is going to be a lot higher than almost any other like electric vehicle manufacturer, just because they have established themselves. That was step one of, like, if you want to call it their master plan or whatever, their business plan, that they want to establish themselves as a luxury electric vehicle company. And so they definitely, like, with that becomes a luxury price. And so let's say that they have a revenue of $139,000 and they deliver only 6,000 vehicles. They have a negative expense margin, but let's say they make 10% profit. Just work with me right here on this one. They have a total expenses of 2.3 billion and a net income of negative 1.5 billion. That's a negative EPS of 93 cents a share. Let's say they deliver 11,000 cars at the end of the year. They maintain that $139,000 revenue per vehicle because of their grand touring. And that may be a little high, but I'm going to give them the benefit of the doubt. Now, I just disclaimer, this spreadsheet is super ballpark numbers. I don't have any total revenue from anything outside of car revenue, and I don't have any other expenses other than expense on sales, R&D, SG&A, and I'm not diluting their shares at all, even though we do know that they will have to raise money sooner rather than later. We just don't know exactly how. Let's say that they figure out their margins, everything's good to go, and they make 15% of their cars. So that's why I have their expense margin at 85%, and the number of vehicles 11,000, and revenue per vehicle at 139,000. Total revenue 1.5 billion, and there's still net income negative 1.4. Also, I am not including tax because I have no idea what their tax rate's going to be. If they have any tax breaks, any things like that, I'm not including right now. I should probably include like a base tax rate, but let's just give Lucid the benefit of the doubt. And also, this last quarter, they did add about 200 million more shares. So that obviously just makes it a little more harder to get earnings, but we'll explain that here in just a second. Negative EPS of 84 cents, so they still don't have any earnings. If you go to 20K cars, are they going to be profitable yet? Let's see. I still kept their 139,000 just because I think they still will be doing more of the high-end Grand Tourings. I'm getting those shipped out. They may be producing more Air Pure, but they will still be probably at 20,000 cars doing the higher-end ones. That brings them to a net income of negative 1 billion. So it's 500,000 less. It's 400,000 less. So they're starting to make more money. Now let's jump to, and that's at an 80% margin. So we're saying that they're going to make 20% on each vehicle. I don't think that's out of the realm of possibility, just because, like I said, with luxury cars, you can also get luxury margin if you have the demand. And we do know that they have at least 30,000 reservations, not including the 100,000 from Saudi Arabia. All right. So let's continue. Let's say that they go to 50,000 cars and they start doing more Air Pure. They start scaling things and things are going great. 50,000 cars at $100,000 per car. That gives them $5 billion of total revenue. And that gives them, I'm going to give them an expense margin. This is probably, I have no idea what their expense margins are going to be with the luxury EV company. A 75% expense margin, so they're making 25% on each car. That gives them a total expense of $5.3 billion and a net income of negative $386 million. So they are getting closer. Negative earnings of 23 cents a share. Now this is when Lucid finally becomes profitable, at least on my little spreadsheet. Not guaranteed. This is when they become profitable. 75,000 cars. I brought their average selling price just down a little bit, just to the air touring. They hopefully will be producing the Project Gravity, and their average revenue per vehicle could be higher, or it could be around here. Total revenue from this is $7 billion. I give them an expense margin, so they're making 29% on each car. I'm kind of just pulling these numbers out of my butt. I have no idea what the actual margin will be. This is my best estimate. I mean, this would be a great margin. And this is when they finally have net income. At $75,000 cars, they have 26 cents a share. Now that's if the ramp from 360 to 75,000 deliveries, they don't have any included costs from this year. Okay, now that may not be realistic at all, or that's excluding taxes and that's excluding um what was the other thing I was excluding? That's also excluding adding to the shares. So that gives them at a 75 PE ratio, 26 cents and $19 a share, which it's about a 20% return from where we are today in terms of like what the spreadsheet marks it at. They could be trading at a lot higher PE. I don't know. Um, then we'll talk about 100,000 cars. I would probably like if I had to like tell somebody like if somebody sat me down and said, "When do you think Lucid will be profitable?" I mean, according to my spreadsheet, I would feel more comfortable saying near 100,000 cars, but I could be way off. It could I could be missing their expenses could be through the roof next year, and I totally may miss the boat on this. So it's kind of important to just keep that in mind. That's $95,000 a car. I factored in Project Gravity in here, and they're just going to make like that's going to be their average selling price. I do think that'll be one of their core competing factors is their average selling price per car. 100,000 vehicles. They have a net income of 1.2 billion. Obviously, going to be taxed on that, and I give them a 30% profit margin on that, by the way. But they still are like keeping their expenses relatively low, which hopefully they can do. And that gives us an EPS of 73 cents per share price of $54. That's at a PE of 75. Let's say Lucid's trading for 100 PE, $72. So you can kind of play with those numbers a little bit. The PE actually does matter quite a bit. And then this is kind of just a Hail Mary. I did not attach dates to any of this. So maybe let me know down in the comments. What year do you think Lucid will hit 500,000 deliveries? At 500,000 deliveries, if they can hold a $90,000 selling price per vehicle, that will be unprecedented, absolutely incredible. That gives them a total revenue of $45 billion, and expense margin I kept at 30%. They're making 30% on each car. Total expenses $33 billion. They have a net income of $11 billion, and that's $7 of earnings, $7.11 of earnings. At a PE of 75, that gets you $533 a share. So when do you think that Lucid will hit 500,000 cars? How is my math off? What do you think about my math? I'm not afraid if you criticize my math. Like I promise you, my math's not perfect. I think their expenses will go up. So maybe in a future date, we'll play worst case scenario with expenses, and we'll play worst case scenario with margin. Let's say they only make 20% on each car. Let's just see what happens. So you can see we fall $200 a share. But still, that's quite a bit better than where we are now. So, like, if you're hodling and you just Lucid makes it through this stage of 0 to 500,000 cars, hey, you're looking pretty good. Let's keep it at 30%. That's what I have. The reservations, they increased them 20%. And I wanted 25%, but like you guys know, I kind of pulled this number out of my butt. This was my estimate, and that's what they did. If they do another 20%, I believe that'll be 36,000 reservations. So as soon as we get to 50,000, like I'll be more comfortable. As soon as we can get to 100,000 vehicles, like you can kind of see a path to profitability. And then at 500,000 cars, you can kind of actually let's see what market cap Lucid will be at with 500,000 cars. Market cap calculator. I like using this one. It's super big. Oh, not this one. I like using this market cap calculator. Price of a single share, 533.46. Let's plug this in. Oh, 533.46. Number of outstanding shares is 1.66 billion, 1.667 billion, 1667. Let's just do the full number. 840-573, 840-573. That's 3, 6. Yeah, that's 1.667 billion. That gives Lucid a market cap of, I believe that was $889 billion. Wait, 100 million? Yeah, that gives Lucid almost $1 trillion company, according to my math. So that's what that is. That's 800. That's a huge return. So very interesting to play with these numbers on a spreadsheet. It kind of takes the emotion out of investing into Lucid. I know that people on Twitter have been like, oh, like hopefully everybody's feeling like we should understand why we're investing. You should read the earnings calls. You should be doing these spreadsheets. You should be asking questions. If you're not the best critic of your favorite stock, then you don't understand the risks completely. Like being the best critic of your stock puts you in such a good position. Finding things wrong with your company that like once you see improve, you're like, whoa, like they improved that, like that's good news. Like once we get like if we can get past this ramp stage, like I know as an investor now, like as soon as I start to see 75,000 cars, 100,000 cars, it's like that's crazy. And by doing this spreadsheet, I realized that the competitive advantage Lucid has of having a like that luxury price, and I can kind of keep track of things now. So I highly recommend that you either guys subscribe and pay attention, like subscribe and watch, or do this yourselves. But again, my math could be way wrong. My math could be way wrong, and my expenses could be way too little. Let's just yeah, if you guys are watching now, you guys might be interested. If you guys are still watching, you're probably be interested. Let's say R&D goes through the roof and they add $1 billion. Let's put a 1 in front of that. So if they really screw up with R&D and we had $1 billion, actually, let's go to when I estimated that we'd be profitable. Let's say we had $1 billion of R&D. We're obviously going to be negative. So $1 billion in R&D takes us from profitable to very unprofitable still. So you can see how quickly my spreadsheet can fall apart. So if you're watching till now and you haven't subscribed, consider subscribing. And if you see where I'm wrong, correct me where I'm wrong. I appreciate you guys. Hope you guys have a great rest of your evening. And congrats on Lucid running today. Hopefully the run continues. I'll see you guys next time. Thanks for watching.